Europe's largest bank reported a first quarter before tax profit of $9.4 billion today, falling slightly short of analyst expectations. The shortfall was driven by higher than anticipated credit losses, which totaled $1.3 billion. Executives linked these financial setbacks to a worsening economic outlook tied to the conflict in the Middle East. Despite the profit miss, the bank saw its revenue rise by 6%, boosted by strong wealth management fees. Moving forward, the lender aims to achieve $1.5 billion in annual cost reductions by the middle of 2026. In international debt news, Mozambique is currently considering a major currency swap. The African nation is looking into converting $1.4 billion of debt owed to China into Chinese renminbi loans. This potential move is part of a broader debt restructuring effort with Beijing, which remains the largest bilateral creditor to Mozambique. According to the country's finance ministry, this option was presented during recent talks and remains a serious possibility on the negotiating table. This strategy closely aligns with a growing trend among other African nations. Many are seeking similar debt restructuring agreements with China to help manage heavy dollar-denominated debt burdens in a challenging global economy. The Reserve Bank of Australia has raised its primary interest rate to 4.35%, marking the nation's third consecutive rate increase. Central bank officials warned that inflation remains stubbornly high, largely fueled by rising energy and commodity prices tied to global conflicts. They noted that consumer prices will likely stay above their 2 to 3% target range for quite some time. Forecasters now predict that borrowing costs could climb even further, potentially reaching 4.7% by December of 2026. If rates cross that threshold, it would mark the highest borrowing level seen in Australia since 2011.